Both Bitcoin and traditional currencies are problematic in their own way. Bitcoin is antagonistic to conventional currencies, since it intends to displace them by surpassing them in utility. Welcome to episode 4 of this series called Crypto School of Crypto Force. I'm Paul Jaramillo, and in this video we'll talk about the differences between Bitcoin, Euro dollar and gold. Bitcoin versus Euro/dollar. Since Bitcoin is decentralized, there is no single entity that can exercise control over it. This paves the way for Bitcoin to function as an autonomous monetary system among equals. That is, without people interacting with banks. This is achieved by Bitcoin by using the computing resources provided by all the people who make up its huge community. That is, without all the people who support this idea, Bitcoin would be worthless. On the other hand, the stability of fiat currencies depends on the actions of centralized entities such as governments, commercial banks, payment processors, and others. Any of these organizations has the authority to decide whether or not your transaction will be allowed, whether or not you will be able to send money to certain people or organizations, and whether or not your money is legal. Basically, your money or your parents' money is not theirs, it's from the bank. Since Bitcoin is not tied to any particular political or economic environment, the owners are the users and nothing, and no one can keep your money. Future transactions using Bitcoin may be tied to so-called smart contracts or other programs that only run when certain conditions are met, adding extra security to the entire ecosystem. The dollar or euro is known as a stable currency that has inflation and is only backed by what a government says. Bitcoin is very volatile. It does not have inflation because you can only create a maximum of 21 million Bitcoins in total. So Bitcoin is more considered a safe haven of value like gold than a utility like the dollar. In general, while both Bitcoin and the US dollar can be used as a medium of exchange, they have different properties and characteristics, and their relative value and usefulness may depend on individual circumstances and perspectives. Bitcoin versus gold. For millennia, gold as a precious metal has been a reliable way to store money. According to the World Gold Council, gold's rate of return has been comparable to that of the stock market over time. It has done well in relative to inflation and has a well-established and liquid market. One important difference between the two is that gold is a tangible asset, while Bitcoin is intangible and exists only on the network. Gold has also been used as a form of currency for a long time, while Bitcoin is still being integrated into payment systems. Gold's inverse relationship with the market in periods of economic weakness makes it an excellent asset to diversify investment portfolios. The cryptocurrency sector is still in its early stages of development, and its price is influenced by investor expectations of huge returns. The unpredictability of the Bitcoin price over the past 2 years has increased the risk of portfolios. Investors believe that both gold and cryptocurrencies serve a unique role in a diversified portfolio. According to a study conducted by the World Gold Council, investors view cryptocurrencies as a speculative investment that only offers short-term benefits. Gold is highly valued for its ability to protect wealth over the long term and act as a hedge against assets that carry a higher level of risk. In terms of their value and volatility, both assets can experience significant fluctuations based on market demand and other factors, but Bitcoin is often considered a much more volatile asset than gold. In summary, both gold and Bitcoin are considered stores of value, but they have different properties and characteristics. Each can have its own benefits and drawbacks depending on individual investment needs and objectives. This is the end of today's video. I'm Paul Jaramillo. We are Crypto Force, and we hope you've learned a lot from this video. We invite you to follow us if you're passionate about cryptocurrencies.